Another FOMC in the books. Jay Powell, Federal Reserve, they increased rates by 0.5% today, which is the biggest since 2000. And they got the Fed funds target somewhere around like 0.75 to 1% now. So it's not quite at 1%, but I was hoping for a 75 basis point rate hike. Didn't get that. However, not surprised that they did the half point basis point rate hike. So as a result, the S&P 500, they're shooting to the moon today. You have the S&P 500 up over 3%. You have the NASDAQ up 3.4%. You have the Russell 2000 up about 2.7%. It was a pretty amazing day for the stocks, and it all happened quite basically. It happened in the last hour of trading. That's how crazy it was, and it really didn't start taking off until Jay Powell said that he wasn't actively, now quote, actively considering a 75 basis point rate hike for now. Now, we also remember him saying that inflation was transitory, and he's not, and before that it was, he's not even thinking about raising rates again until 2023. We're in 2022 and we've already raised it twice. So his credibility is crap. Even in the presser, he said that, oh, I think my credibility is great. No, it's crap. The Federal Reserve is the biggest embarrassment to the American institution that I can think of. There's just nothing more embarrassing than the Federal Reserve. They create crises. They try to stop the crises from getting worse, only to make it worse. They talk about soft landings, but it ultimately results in hard landings. They really suck at what they do. They are the worst. I don't even give these people any credit for being smart. I don't care what their degrees they're in. I don't care where they're from. They are absolute idiots. So with that out of the way, I'm 100% cash in the market. I had no dog in this fight today. I got out of my QID position yesterday as the market started rallying early on. I said, you know what? I'm not going to go ahead and fight this anymore. There's a very limited time frame that I want to even be in QID because I'm not going to take it into the FOMC statement because of something like this happening. So I got out of it, stayed on the sidelines. I was happy. I even told myself today, hey, if it looks like it's going to rally another 100, 150 points following the FOMC statement, I'm not going to chase after it. So I had the plan in place. I followed it. It was quite easy, honestly. I just, stuck to my guns and watched the fireworks unfold on their own. So with this live stream today, I'm going to be going over all of my charts in the beginning, and then I'm going to go and take care of all of your charts thereafter. We got one from John O'Neill already asking about what way do I approach the market for tomorrow. I'm going to tackle that one right out of the gate just because it applies to what we're talking about right now. But yeah, post your stocks and questions that you want me to have answered. I'd be more than happy to knock them out. We're doing these every Wednesday at about 4:30 p.m. And on a day like today, it's quite eventful and really worth talking a lot about what we just saw here today and how it affects the overall charts using technical analysis. Does this mean that we have a bottom end? Does it mean that the worst is behind us? We're going to get to all of that and much more. So that being said, let's look at the SPY. Here you got it. And it's a clean, fresh board here. And this is going to go towards John's question here. Which way do I think that we should approach the stock market tomorrow? The stock market actually has a history of reversing what it did the previous day. It has a incredible history of it, actually, where you'll get very bullish reaction, and then the market almost like thinks about what was just said and it reverses course. Now, if we go back to March 14th, the rally off of the previous lows, this March 14th lows, we put in a previous bottom at, and then you had a solid rally, and then the next day you had the FOMC statement. Tried to sell off initially, just like what we saw today, and then it just went gangbusters, okay? People started aping back into SPY, and it continued for quite a bit of time, all the way into the end of March. So about a 2-week rally, and then it started falling apart again. So yes, there is the potential that we see another one of these rallies. I think people are a little bit more pessimistic now than they were back then. I think back then people still thought that there was a chance at all-time highs. This rally took us so high that we almost went back. We were within like less than 3% of being positive on the year for SPY. So today's rally, it's a pretty solid rally. And the rally so far this week, we're 3 days in. All 3 days have been positive for SPY. But look, I mean, We've gone from 404 to 429 on SPY. That's about a 250-point rally on the S&P. Well, I mean, at this pace, we'll be at all-time highs on Friday, right? No, I'm kidding. I really don't think that's a possibility. But I don't expect this kind of ferocity, this kind of hope and FOMO to continue throughout this week. And so I wouldn't be ultimately surprised to see if we start getting a little bit more of a profit-taking mindset in the days ahead, because when you're in a bear market, the rallies are eventually sold. So I also want to tell people too that it's not so much to be successful in the stock market. You don't have to have a crystal ball and have to predict exactly what the market's going to do. Oftentimes, I don't know what the stock market's going to do, nor does anybody else. Like you take coming into today, right? People will tell you what they think that market might have eventually would do, but nobody actually knew. Everybody was guessing. Everybody was trying to put their best 2 cents into it, and some people were right and some people were wrong, but not for a moment should, if you were on the right side of that call, actually have confidence in your ability to how the market's going to react to the FOMC statements going forward, because it's a shot in the dark, guys. And I thought that we would probably rally, and I'm not saying that just in hindsight. You can go back and look at the video that I did on Monday. I was talking about on Monday how and I'll pull up the weekly chart here. We've pulled back for 4 straight weeks. If you go back in time, there's not a lot of 4-week rallies that was extended beyond just 4 weeks, where we rallied like 6 or 7 or 8 or 9 weeks in a row. Most of the time when we had a 4-week sell-off, we saw an immediate attempt at buying the following week. So here in February, this was from March 2020. The most that we sold it in a row in terms of weekly candles was twice, two candles in a row. If you go back to 2018 sell-off, the most that we saw was a 3-week sell-off, and we saw that twice. You'd have to actually go back to 2011, as far as I could see, where we actually dropped more than 4 weeks in a row. And I know I'm kind of flying through this here, but here we go. It was like 8 weeks in a row that we dropped back in May of 2011. So it's possible that we can drop 4 weeks in a row, more than 4 weeks in a row, but it's not very, it doesn't happen very much. So it's not, so we shouldn't be surprised that we're seeing a bounce attempt here. And just because you're seeing a strong bull candle or a green candle here this week doesn't mean that necessarily the bottom's in or that we should take it as much. We have not seen the bears really push the bulls to their limits. We've seen some panic selling over the past week or so, but we haven't seen just complete devastation yet. And I did a video on it again on Monday. I talked about the Fibonacci retracement levels. Very much worth going back and listening to, or watching, actually. It's not a podcast. Watching and just seeing the different levels that I'm pointing out and how I compared it to different points in time. So on the daily right now, with SPY, you still have this neckline here. We recaptured it. We also have some supports. I want to say it's about right around here. We're just above it. So from a short-term bounce, it was a good day for the market. It held some key support level, or recaptured some key support levels, and trying to even break back above that support level there. I don't think that one's as important as this one right here, and so far it's holding. You still have the head and shoulders pattern in place here, the left shoulder, the head, and then you got the right shoulder. In order to nullify that pattern, it's got to break back above the March highs. That would break the right shoulder pattern. So a lot going on here. It's not so much about what does the market do tomorrow that we should be concerned with. What does it ultimately do? If it wants to keep rallying, for me, I'm 100% cash, right? If it wants to keep rallying, I'll let it keep rallying. Maybe I take in a long position here as maybe like a quick 1 or 2 day trade. Could do that. But for the most part, I'm wanting to see where does this thing stall out at. If we start to break these highs here, okay, maybe something's fundamentally changing with the market. But this is a heavy resistance level that the market's going to have to break through, and I don't see that happening anytime soon. And we also have a declining trend line here in place. We're also in a declining channel. I'm not trying to get too crazy with these markings, but you can see there's a resistance here, there's resistance there. So even if we have, let's say another 200 points to the upside, we're dealing with heavy resistance right there, okay? Massive resistance. It's got to break through those levels. You also got to remember, too, what defines a trend. It's for the upward trend, it's going to be higher highs and higher lows. Downward trend, lower lows and lower highs. So it goes down and it rallies back up, but it doesn't break the previous highs. It forms a lower high. So right now, all we have here is a lower high. Maybe it reverses here. Maybe it doesn't. Maybe it keeps going even higher. But until it can break this high here, you just have another lower high in the market. So it's really not that big of a deal if we rally. Ultimately, I want to be positioned for more downside in the market. And I'm not trying to like scare people or anything. I'm just trying to follow the charts. So far, following the charts in 2022 has been profitable to the downside. That's where I want to trade. Believe me, one thing I would love to do would be to get back long on the market. It's a lot more fun. It's a little bit more enjoyable. It's not as crazy. Oh, and you can sometimes drink bourbon too, you know, and you're not doing it out of stress. You're doing it out of enjoyment. So in any case, speaking of bourbon, I'm drinking some Yellowstone here today. This is Yellowstone Select. Pretty good bottle here. I really like it a lot. I picked up a cheap bottle of it. I got a couple bottles of it here, but I picked up a bottle at Sam's. It was like $33. I'm real cheap for it. So can't beat it. Let's go ahead and look at some of y'all's questions here. Wait, before I do that though, I want to look at the VIX, because in the last week I talked about the VIX, and if you remember, I was saying that there was like a heavy resistance level that we had to be mindful of. But where do you think the VIX took us up to last week? Kid you not. I'll take the chart that I drew last week for you guys. This was the chart last week. Look where it took us right up to. Right to that resistance level on Monday. Couldn't close above it. And now that's the whole issue. Very rarely have we been able to make a close above this resistance level. And even when we do, we immediately sell off right afterwards. Well, we got right up to it. We even broke above it and then saw an immediate sell-off thereafter. And so that continues to be decent places when the VIX gets this high for equities to have a short-term pop. I mean, it's been going on now since September of 2020. So it's been really impressive. Now, let's get into some of y'all's stuff here, okay? We got SMH. I want to look at that. Let me push my face up above it just a little bit so you can still see me. SMH, this is your Semiconductors ETF. I like to, when I do these things, I like to start off from scratch. But again, we talked about lower lows and lower highs. That's what you have in semis right now. Still have lower lows, lower highs. It's not a perfectly formed channel like what you were seeing with the SPY from earlier, but it's still a channel. It's a downward channel. And until it can break out of this channel, it's still trending lower. So you had NVIDIA. It had a pretty good day today. It actually broke a declining trend line here in the short term. That looks pretty good. However, you still have resistance overhead right there on NVIDIA. Then you take something like AMD, which a lot of people are excited about today because it rallied almost 10%. Again, what do you got? You still got a lot of heavy resistance there that it's yet to push through, and that's a lot longer road to travel. Maybe it can get up to 110 and provide some decent gains for traders, but be very careful here. It's also approaching some resistance similar to NVIDIA here in the near term as well. So when you take a look back at SMH, you don't have that. Well, maybe you do. A little bit of resistance right there. It's not a real clear level of resistance that I like to typically fall back on, but there definitely seems to be some rejection in price, even some bounces in the past off of this level here. So something to pay close attention to. If it wants to make in the short term, if it wants to make a higher high, it needs to break back above this to like 253 level, 253.27. And then from a longer term standpoint, going back to the beginning of January, it needs to break above the March highs, but it also, in doing so, it'll break above this declining channel as well. So, and Too Low Cow Friends also says, trying to make sure I said that right, says went positive at the opening and didn't take my profits, and it went against me. I guess you were shorted then, I guess. But I mean, the thing with like the semis and everything else is that if you think the Nasdaq's going to go down, ultimately SMH is probably going to go down with it. I mean, I don't see much chance of it not going down with it, with the tech sector going down and with the Nasdaq going down as too. So yeah, I mean, you still have this head and shoulders pattern as well. Left shoulder, head, and then you got a right shoulder. It has confirmed it. It's going back to that neckline there. So see how, for me, what I'm wanting to watch tomorrow is I want to see how it handles this neckline there. Does it challenge the neckline? Does it see a sharp price resistance? I could even get back short on the market tomorrow. Like, this was enough of a rally. If you take the Qs, for instance, and I haven't really talked about the Qs yet, but if you take the Qs, you can see down here on the bottom where the stochastics, it's come off of the lows. For a while there, we were hitting at like 7 and 8 single digits on the stochastics for all the indices. Now it's back up to 33, and that's a fast moving stochastics too, by the way. But nonetheless, it gives you a little bit more room to be able to put on some new short positions. So Reyes, Tesla low around 886 and closed 952. She's yes. Speaking of Tesla, we can take a little stab at it here. This one's been interesting too, because I'm trying to remember where it was at. I think this was it here. Let me just see what. Yeah, this was the drawing that I did the other day. You have this longer term trend line in place going all the way back to November of 2020. So far, let me zoom out a little bit so you can see it better. November 2020, it's held it along the way. Nice bounce off of it there last week, right there off of that trend line there, and then it's bounced for 3 straight days. So big moves, guys. When you're in a bear market, you're going to have some massive bull rallies. I mean, the likes of which you've never seen before. They just don't happen in a bull market. They happen in bear markets. So even the rally itself is indicative of this not being a very good market to be long in. So Tesla, yeah, holds this rising trend line, but you also have declining resistance above. This is going to likely stall out any kind of price move as long as we remain in a bear market. Ricardo asks about Facebook. Let's see here. And what a profile pic from Ricardo, man. I wish I had that hairline still, man, myself. Let's look at this here on Facebook. What I'm attempting to do here is I'm just trying to see, okay, any new short-term developments after like what we've seen the last couple of days. I usually check up on these almost on a daily basis, if not, pretty much every day, multiple times a day. This is the weekly chart now that I'm on. You can see it goes all the way back to 2013. Long-term trend line still holding up really, really well. It's bounced off of it, but what it needs to do, and let's ignore this little level right there. What it needs to do, it needs to push through this declining resistance right there, because on the daily, you see it even better. It starts with the gap down. It does that. Then it's really close to getting into that gap, and that gap can oftentimes act like a suction. It'll just like suck price right back up to the pre-earnings debacle. Barry's wanting to know, I was wondering, man, what happened to all of that printed COVID money? Did it disappear completely? Has it gone to all the big companies? I was actually thinking about this today. It's like, we talk about the wealth inequality in this country, right? It's like, oh man, the rich just kept getting richer. Well, think about it. You do all this PPP stuff. You send everybody stimmy checks. What are they going to do with it? What does the government want you to do with it? They want you to spend. Where are some of the places that people are going to spend that money at? Amazon, Walmart, McDonald's. What am I forgetting? Apple. Let's get some new iPhones, right? We just got a $2,000 stimmy check. People are going to be buying all those things. Let's go get that Netflix subscription again. I don't think it helped that one. Bad example. But nonetheless, people are going to be spending that money. And if it's going to Amazon, for instance, who ultimately benefits from you spending money at Amazon? Jeff Bezos and the larger shareholders too, right? They're the ones that are going to benefit the most. So it just goes back into their pocket eventually, right? So, they get higher salaries, bigger bonuses because you took the stimmy checks and gave them to you. And I'm not saying everybody did that, but the best thing we could have done is save that money and put it in our pockets and save it for a rainy day when we might need it, like the current economy that we're living in right now. So yeah, you inject money into the economy, it all goes back to the companies because you're going to spend it with companies. All right, let's do this real time here for Xiom. Hi, can you please talk about gold and recommend which company you think is working better during this time? Also about Apple, the best. Okay, so let's look at Apple first. Huge rally too. I mean, it was positive pretty much the whole day. I mean, it snuck maybe a little bit into the red there at one point. Yeah, a little bit red, but it stayed green when the market was down 1%. It was pretty phenomenal because I think at one point Nasdaq was down like 1.2% or so, and this sucker's just still chugging in the green. I do think that we probably won't see a bottom in this market until Apple finally gives way and starts to fall apart. Right now, it's holding its own remarkably well. I mean, it's crazy. So you got like this expanding megaphone pattern here, trying to break through this resistance. Maybe it does that tomorrow. You also have, and this is the other support level that I would say, pay close attention to. And I've been also, before I get to that, I've been talking about this bull flag pattern. It broke out of the bull flag pattern, but failed to hold it. So we can get rid of this bull flag pattern now. It's irrelevant. So rising trend line here. We didn't quite test it. I would have loved to have seen a little pop off of that. It just would have made for nice, clean technical analysis. We just didn't get quite there. But again, this 200-day moving average has been a magnet for this stock. It hasn't been holding it really all that clean in the last two times it's breached it. But I mean, stock's trading at 166 and it, opened the year at around 178. This thing's not that far from hitting green on the year. Still a good stock, but I think the chart's a mess. And so when I say a mess, probably the better phrase is choppy. Because what I want to highlight here is that since about November, and this isn't a bad thing considering the market we're in, the market's been very choppy. Or the stock has been very choppy, the market's been very bearish. And so price is contained inside of this price action here. So you're not really making money on this stock, but you're not really losing a ton either. Until it can break out of this box, there's really nowhere for this price to go. I think if it comes back down to this rising trend line, okay, you can play that bounce and maybe you can ride it back up to 180. But if it breaks these March lows, that's where I think things get pretty problematic. And then in terms of gold, gold has been weird. I mean, if you take some of everybody thinks, okay, you got inflation, gold's going to go through the roof. If you see the stupid commercials on TV about, oh, you buy gold and your investment's going to triple or quadruple because of bad times that are right around the corner. But I mean, we got inflation, right? When we got 8+% inflation, gold hasn't really changed. I mean, it's the same price as it was July of 2020. I mean, that's why I'm not really a gold bug, because it just never really impresses me at all. There's going to be days where it goes up when the market goes down. If I'm looking at it from just a pure technical analysis standpoint, let's see if it pulls back to this 172 and wants to bounce. I mean, that's a pretty significant support level there. If it can pull back to that level and bounce, maybe you have something to work with there. But you can always start drilling down. Let's look at gold miners. Is there opportunities there with the gold miners? Let's see here. If you just draw the support level going across, and I know I just already drew it, but I just want to start fresh. You have that. Looks like you have some resistance there, or not resistance, but declining trend line right there that it's pulled back to and it's bounced off of as well. So there's multiple support levels there. If I was to play it, I'd probably do like GDX. I probably wouldn't go into the specific gold miners. GDX chart looks pretty good. Ryan says, what's up? What's up back at you? Barry asks, the Ukraine situation turns somewhat peaceful. Would the markets rally off of that news, or is it just a waste of time speculating? I think the market's kind of gotten used to the whole crisis going on, the invasion. I think the market's become somewhat accustomed to it. I do think, okay, if tomorrow they announce, oh, we've got a ceasefire and peace through the entire region, yeah, the market rally for sure. I just don't know how long it would sustain it for. I think the market's shifted its focus away from the whole, not entirely, but I think to a large degree, it's shifted its focus away from Russia-Ukraine conflict to inflation. What is the Fed doing to earnings? So I think that's what the market's more or less focused on. I don't think it's so much focused on the day-to-day developments over there. And I think it's going to take a pretty big news piece to kind of get the market interested in it again or to rally off of it. Let's look at CAT. I haven't looked at this one in probably it's a week. I feel like I haven't seen it. So Caterpillar. This one was interesting in how it had that initial head fake. I hadn't even thought about buying it back then too, but had the initial head fake and it just completely fell apart. And now it's right back up testing this resistance. I don't know how much I want to trust this as a breakout level just because of this right here. I mean, that was such a massive head fake. And granted, the market was atrocious during that end of April. I mean, the whole month was atrocious. But I still, man, I hate seeing those kinds of head fakes because it just doesn't give me a sense of confidence going forward. And it's really run nonstop from 207 to 222. So if you see the breakout, okay, is it going to, run another 7-8%, because it's already run about, if you look at it off of the lows from last Thursday and the last week, it's rallied 10%. So it's a good rally. I liked it. This is the kind of breakout that I would like, honestly. I love it when you see it like that, where it consolidates just below the breakout level, because then you can get a nice stop loss. Like you can put your stop loss right around here, and then you can play that breakout. Stop loss is much more manageable, and with the reward, if it goes up to 240 or something, and you're only you're getting in at, let's say, 226 with a stop loss around 216. I mean, you can get an easy 2-to-1 reward to the risk return. So, but this here, that's a big dip, and then it goes straight back up. I just don't see a clear path on that one. I mean, it could work. So here's the thing. When I say I don't know if I like it or not, it doesn't mean that it can't go up. I really don't concern myself as much with whether or not the stock will go up or down, but can I manage the risk on it? Can I put a stop loss at a certain place that's going to allow me to protect myself in case I'm not right? Because I pretty much expect to be wrong about 40% of the time as a trader. And that's not bad. That's really good, actually. And I'm not tooting my own horn or trying to justify why I have 40% of my trades that end in losers. But what I'm trying to say is that I try to protect myself from myself, because I know that as a human being, I'm fully capable of blowing up my portfolio. I am. And so I guard against that with every trade that I get into. And I think, too, a lot of that comes from just the environment that I learned to trade in. I learned to trade in 2000 with the dot-com bubble. I learned to trade in 2008 during the Great Recession. I've gone through the 2018 and the 2011 European banking crisis. And I mean, just tons of different things. So I never trust the stock market for too long. But while it wants to trend higher, I'll ride it up. But on Caterpillar, I mean, definitely a lot of chop, which isn't the worst thing in the world considering the market that we're in. I mean, it's practically, I think it's actually green on the year. That's crazy. Is it green? Geez, that's awesome. 206 to 222 so far this year. So it's in positive territory. And Kilroy found all my good stuff. Okay, so for those who don't know, oh, by the way, make sure to like this video too. That helps me out a lot. Make sure to subscribe to the channel so you can get notified of future live streams. I also do about 2 videos a week. And I got a podcast, Swing Trading the Stock Market. You can get all that. You can also get these videos here. Share Planner has the trading block. It's really good. That's where I'm actively trading at each day in that chat room there. Okay. The MMAC ACL 85. I don't know. That's a hard one. The MMA. Okay, I got it now. So it's the MMA guy. He's asking, hey, I followed you on Spotify for a while. Awesome. I learned a lot from you. I even had an old fashioned once in a while now. That's even better, man. That's what I like to hear, because old fashions are good. What's your take on SXC? It's not the worst chart, guys. Look at that. I mean, you got a chart there. The problem is, because it's under $10, it's going to be a much more volatile stock. You're going to have a much wider stop loss, right? I mean, you're looking at least 10%. From a technical standpoint, I really like the chart. Okay, if I'm not looking at reward to risk ratio at all, I like this consolidation. I like how it's trading above this consolidation right there. That's a good look for the stock. I think that there's potential maybe to 978 to 983. At current price, that's not the best reward to risk ratio, but I like it. And again, I'm talking from technical, not reward to risk. I like how it's held this rising trend line as well. So let's do this. Let's pull up the coal sector here. Or not the coal sector, coal industry. And see what other opportunities there are. Actually, I was looking at I was looking at ARCH or SXC, I'm sorry. No, I was looking at it from the daily. Okay, I thought I was maybe looking at it from a weekly, but I wasn't, because that could change the whole stop loss thing. My bad. I switched different charts and it went to a weekly on me. But let's look at, again, I do these things live, right? So I'm a trader, not an entertainer. So there's going to be mistakes along the way. But AMR, what I'm doing here is I'm trying to look at the different charts here. The coal sector industry is really, really good for the most part. Just trying to see maybe something that's still a wide stop loss. I mean, the whole industry is very crazy, but I mean, that's kind of cool from a breakout standpoint. The problem with it is, and I don't know what their earnings are, so you got to keep an eye on that. It looks like August 2nd is their next earnings report, but you got to be careful with the volatility. I mean, the price ranges are just so wide on it. Again, I'm looking for decent reward to risk ratio. Okay. There's plenty of times in trading where I have to pass up on good stop setups just because I don't like where I have to put the stop loss at. And I'm going through them right now, and maybe you can. I'm looking for this rising trend line, but looking for something that gives me a good stop loss. And I have a feeling the further I go down, the cheaper some of these things are going to get. Yeah, so I don't know if there's a lot of really good setups. The SXC might be one of the better ones out there, but risk reward is going to be very difficult. Bear's asking about ORGN. Yeah. With ORGN, it still has a lot of that resistance right there. So even if it does come back, I mean, that 730 is going to be brutal. Let's look at some of these big guys here. Walmart, WMT. This thing used to be so boring of its stock to trade, but look at that. Ooh, nice. All right, you see that there? That's a pullback to major, major support. I mean, that's good looking stuff right there. Went up 1.3%. In this market, Walmart's not a bad one. There's a legit trade setup here. I'm putting that on my watch list for tomorrow. Very good, legit trade setup. So staples tend to do good when the market's pulling back relative to all the others. It's not going to usually sell off like a tech stock or a discretionary stock. Staples tend to, especially like a Walmart, they tend to attract a lot of interest in these times. So nice orderly pullback, not at all like crazy at all. You could even say maybe like a bull flag. It's a little bit steeper than I like for it to be a bull flag, but that thing's pulled back really well to this support level. If you look at it from the weekly standpoint too, I mean, it looks really phenomenal. So nice doji candle right, or a hammer candle right off of that support level. So I think you can get in at like any time here and then put the stop loss below that 150 level. Really good. That might be my favorite chart so far here. NFLX. What you guys got on this sucker here, man? So you got this rising trend line, right? I think I have another one here too that I want to pull up. All right, heavy declining resistance. But I mean, that resistance goes back to the end of 2021, November 2021. Then you got, well, let me zoom out a little bit so you can see it better. Huge, huge rising trend line going back to like 2013. Let's just pull it up on the monthly so you can see it even better. The problem with this, and this is like one of the best examples of what the Fed has done with their just horrible policy making. They just created so much froth in the market. So you had a nice rising trend line. It could have done really well if it would have just stayed on that trend line. But instead, accommodating Fed interest rate policy has just sent this thing right through the moon. And then what does it do? It just completely falls apart. So yes, there's some potential for a bounce off of the support level, but if you're going to play it, I don't see any reason to hold it if it drops right back down below that major support level. And that's almost like a 10% stop loss too. Cameron says he took a third of a position in Costco after the positive reaction to the Fed. Do you think, or do you expect it to rally from here? So Costco actually did a chart on this for the members, the YouTube members, yesterday. Let's go back to the clean slate. This is the rising trend line that I'm watching here on Costco. Really solid rising trend line. It's held it so far. Needs to continue holding this rising trend line. And then you can put the stop loss, probably around like 517. So you're talking about a $30 stop loss on about even less than that, I guess. It's probably about $28. So it's a little over like 5%, 6% stop loss. And then it has the potential to get back up to, 608, 609. This is a stock that was just trading in mid-April at all-time, right below all-time highs. In fact, earlier in the month, it did hit all-time highs. So really good chart, though. That's one of the better charts out there, too. It's like the Walmart chart, just really solid. But put a reminder on myself on my watch list. It's actually on my watch list, but I just don't want to forget about it either. Then we got John says, hi, after I'm in ATR, my stop loss is 393 and I'm down 2%. Do you think I should get out? I got the idea on Twitter on this one. Big mistake, I know. Oof. Okay, so ATR, let's look at this sucker. Stop loss 393. I mean, that's a serious stop loss right there. I mean, I can see where you might be putting it. It's not. This is the reason why it's really hard to trade these low dollar stocks, because there's just not a lot of forgiveness. So there's a little bit of support maybe at this 392 area. So it could technically go down to 393, not break support, and then bounce back up. The other support level would be like 405. So a stop loss below there. Some support off of this 20-day moving average. That's the green line. I'm just looking at, it's the first time I've ever looked at this chart here. No, that's not going to work. I mean, there's ways to draw the. It seems like there's somewhat of a basing pattern right there. And that 200-day moving average does seem to be weighing on it some. And you can go back and look. It's not perfect resistance, but there is a certain degree of resistance there from here to right here. Whoops. Right there, here, and then all over the place right here of late. So if it can break above that resistance and keep rallying, maybe there's a chance. But I do think it's a very, very high risk trade setup. And then we got Barry Sigmore. He says, I'm calculating my winners and loser ratio. 42% of my picks went up. 58% basically crashed. I hope you don't crash on your losing trades. We got to work on that, because losing trades aren't bad if you just keep them manageable. Like my losing trades, they're usually like somewhere between 3 and 4% on a single trade, but I want my winners to be 8, 9%. So it looks like his winners did outweigh him, so that's good. All right, Kevin Haas. Check out the sell-off in volume and UUP. Good time to jump in gold or GDX. Talked about VDX and gold already. UUP, that would be US Dollar Index Fund. I mean, right now, I think it's a little bit exaggerated at this point. I mean, I would probably wait at least, for me and my trading, I would be waiting, maybe even waiting until it could come back down to maybe 26.62. That would be my ideal spot. Vector candles, not really familiar with those. I don't want to comment on that. Bitcoin had a day today, guys. Since it's trading around the clock, it's still having a day, but 5.5% up. This one's been interesting watch. Okay, this is the daily chart, but I'm switching from TC 2000 to Trading View here, so sometimes I can make some awful keyboard errors here trying to do the same thing on TC 2000. It's like completely different commands. You got this bear flag pattern or rising channel here. Not sure which one it's going to ultimately be, but it seems very determined to hold this support level right there. Then you got this massive support. And if this breaks, this is where I think Bitcoin could get really ugly. You break that, that's no bueno right there. But as long as this one holds, I'm fine with the Bitcoin as a trade. But I have a little bit of Bitcoin. I just have a very small amount. I don't even really care too much about it. It's more or less just trying to understand more of the mechanics of crypto, so I don't sound like a complete moron when I'm talking about it, and it keeps me interested in its action too. Let's see. Barry started trading in 2019. Look, you don't have to worry about that, man. You're ahead of the game for a lot of people, but that's good. I mean, we all got to start somewhere. And I was really fortunate just as a young kid to get started at an early age. I didn't know this was going to be a career of mine or anything else. I just thought it was something really exciting. And trading during the .com bubble, it was like you could do nothing wrong. So that also made it very interesting for me. Ah, yes. Alex asked about, I almost forgot about his BAC. So Bank of America, I actually think it's a little bit of a short setup there, but let me get out of this sucker here. Go to Bank of America on this chart. So one of the things I'm noticing here is that you got a little bit of a declining trend line. It actually might have broken it since I posted about it. But I was saying, okay, this could be, holy cow. I just need a clean slate on this thing. There we go. That's what I'm looking for. You get so many lines, you can't hardly see what you're looking at. That's why I like a lot of like my charts to be very clean. And then you have this rising trend line here that it's holding as well. But I hate that so many of these charts have this like frothy, like, let's go crazy. We're going to go way off of this rising trend line and then return back to it. It's bounced off of it, but it's bouncing right into this declining trend line. So does it break through it? If not, this kind of creates a good setup for a potential short. Now, if you get short on it, I would prefer to get short on a price rejection of this declining trend line and then see, okay, can it break this rising trend line this time or not? If it doesn't, then I would just go ahead and cover that short. But I think it can. I just don't really know how strong this declining trend lines or this rising trend line is going to be, considering that it's only tested it one other time before this past week. And then we got LMT, Lockheed Martin. So it was holding this rising trend line going back to December for a while there. I thought it was a really interesting chart. I think you brought it up last week and it caught my attention then. So far, it's broken below it and come back above it. It's a it's going to be a very messy chart. So, that's kind of like the price range you're dealing with here. I mean, you got a couple of, moments one moment actually, where it broke below the box, but it couldn't hold on to it. So with this one, I just think it's a really difficult chart to find a clear edge on. I think it's good that it's back above this rising trend line, but there's not much else going for it. So, all right, guys. So, wild day in the markets. It's going to continue to be wild. I'm pretty confident of that. But we can control ourselves. Okay, we can control ourselves by not getting way too leveraged in this market, by not putting too much capital to work, because it's not like trading in 2021 when the market was steadily increasing, like you would just, trade in the FANG stocks and it would just go up steadily each and every day. We're seeing wild swings. I mean, what you just saw in the last hour and a half is what we would have seen in an entire month of trading last year. And we saw it in an hour and a half. That creates a lot of volatility in the portfolio. So there's no reason to go like gangbusters and just, go 100% short or 100% long in this market. Let the market come to you. let it make you more comfortable with adding more positions. Don't be overzealous. There's people, and I talk to them in a chat room during the day. They're like, I got to get 100% long. I don't know what to do. I can't sit on all this cash, but you can, because cash is a position in any kind of a market. It signals the fact that you don't have a high level of trust for it. And as much as I want to be bearish on this market for right now and see that push lower, I don't trust it to the downside either. So I'm taking the opportunities slowly and steadily as they come along. And that's one of the things that has helped me incredibly well in this particular market. And I think it can help anybody just by trading less, but trading, fewer positions. As always, make sure to like and subscribe to this video. Click the join button down below if you want some of my market research sent to you each and every day. That's going to help support this channel as well. And don't forget, we do these things pretty much every Wednesday, 4:30 p.m. Eastern. And I do about 2 other videos on top of that. I'm trying to add some shorts and stuff like that. Right now, it's from more of a time constraint standpoint that I'm dealing with. But I got cool ideas in the future here for this channel. So make sure to be part of it. Thank you guys, and God bless.